Most people think wealth is about how much money you earn. So they wake up every day chasing higher income. They look for better jobs. They hustle harder. They believe one simple idea. If I just earn more money, I'll finally become rich. But here's something shocking. There are people earning huge salaries who are still broke. And there are people earning modest incomes who are building real wealth. So what's the difference? Today, we're uncovering one of the most important financial truths ever. Assets versus liabilities. A simple concept, but one that secretly controls whether people become rich or stay stuck financially. And once you understand this, you will never look at money the same way again. Section 1. What is an asset and what is a liability? Let's start very simple. An asset is anything that puts money into your pocket. A liability is anything that takes money out of your pocket. That's it. No complicated finance language, no confusing definitions. Just one question. Does this thing give me money or take my money? Now think about your life. Your phone, your clothes, your transportation, your rent, your lifestyle. Many people assume everything they own is good. But in reality, not everything you own is helping you build wealth. Some things are helping you spend money faster than you earn it. Let's make it clear. If something produces income for you, it is an asset. If something consumes your income, it is a liability. Simple, but powerful. Section 2. Why most people get it wrong. Now, here's the problem. Most people were never taught this properly, so they grow up believing if I can afford it, then it's fine. But affordability is not the same as financial growth. That is where the confusion begins. People buy things just because they can pay for them in the moment, not because those things are helping their future. And slowly, without realizing it, their money begins to disappear through small decisions. A phone upgrade here, a new outfit there, a better lifestyle every year. Individually, each decision feels small, but together they build a financial trap. Because the more liabilities you accumulate, the more your money works against you instead of for you. Section 3. Real-life examples of assets and liabilities. Let's make this practical. Let's talk about things people think are assets, but are actually liabilities. First example, a car. For most people, a car is a liability. Why? Because it takes money from you every month. Fuel, repairs, insurance, maintenance. Unless that car is being used to generate income, it is not putting money in your pocket. Second example, a house. People often say, my house is my biggest asset. But ask the simple question, is it putting money in your pocket or taking money out? If you are living in it, it is consuming money. If you are renting it out, it can become an asset. So again, it depends on how it is used. Third example, a phone. For most people, a phone is a liability, but for someone running an online business or content creation, it can be an asset. So here is the truth. Most things are not automatically assets or liabilities. They become what you use them for. Section 4. The hidden reason people stay broke. Now let's go deeper. Why do people keep buying liabilities thinking they are building wealth? There are 3 major reasons. First, social pressure. People want to look successful before they are successful, so they buy things to impress others. But impressing people does not build wealth. Second, emotional spending. People spend to feel better, not to become better. Stress, comparison, and pressure all influence decisions. Third, lack of financial knowledge. When people don't understand assets and liabilities, they assume expensive things are valuable things. But expensive does not mean profitable, and that is where the mistake begins. Section 5. The wealth difference between two people. Let's imagine two people again, person A and person B. Both earn the same income every month. Person A spends everything on lifestyle, new clothes, new phone, better comfort, constant upgrades. At the end of every month, nothing is left. Person B also spends, but thinks differently. Before spending, person B asks, will this bring money back to me in the future? So person B begins to slowly build assets, small investments, a side business, a skill that pays more over time. At first, person B may look slower, but after a few years, something happens. Person A is still working for money. Person B's money starts working for them, and that is where the gap begins. Section 6. How assets actually create wealth. Let's break this down simply. Assets create wealth in one powerful way. They generate income without you being present all the time. A job pays you only when you work, but an asset pays you even when you are resting. That is the difference. Examples of assets include businesses that generate profit, investments that grow over time, skills that increase your earning power, systems that produce income automatically. Now listen carefully. Wealth is not about how much you earn once. Wealth is about how many times your money works for you. Section 7. The biggest trap: lifestyle expansion. Now let's talk about a silent wealth killer. It is called lifestyle expansion. This happens when your income increases, but your expenses increase at the same speed. You get a raise and immediately upgrade your lifestyle. A better phone, a better apartment, more comfort, more spending. So even though you earn more, you don't actually become richer, because everything you earn goes right back out. This is why many people stay financially stuck for years, even while earning more every year. Section 8. How to start building assets. Now let's make this practical. How do you start building assets? You don't need to be rich. You start small. Step 1. Learn a skill that people pay for. Step 2. Save consistently, even small amounts. Step 3. Start a small business or side income. Step 4. Invest slowly and consistently. Step 5. Reinvest profits instead of upgrading lifestyle immediately. The key is not speed. The key is direction. Because even small assets, over time, grow into something powerful. So here is the final truth. Assets and liabilities are not just financial terms. They are life-shaping decisions. Every time you spend money, you are either building your future or weakening it. Rich people focus on building assets. Struggling people focus on increasing liabilities. Middle-income people often confuse both, but now you know the difference. So from today, pause before every financial decision and ask, is this building my future or reducing it? Because wealth is not created by how much you earn. Wealth is created by what you choose to keep, build, and grow. And if you want more simple, powerful explanations like this, subscribe to Explains 102. Because understanding money is the first step to mastering life. So at the end of everything we've discussed, it all comes down to one simple truth. Every money decision you make is shaping your future. You are either building assets
or collecting liabilities. There is no middle ground. The difference between people who struggle financially and those who build real wealth is not luck. It is understanding and applying this simple principle consistently. And now you know it. So the next time you're about to spend money, pause and ask yourself, is this going to grow my future or reduce it? Because that one question, repeated over time, can completely change your life. And if this opened your mind in any way, if this helped you see money differently, then you're going to love what's coming next. On this channel, we break down money, life, and success in the simplest way possible so anyone can understand and apply it. So make sure you subscribe to Explains 102 and turn on notifications, because the next video might be the one idea that changes everything for you. I'll see you in the next one.